simultaneous to that, if you get to $35 silver, on the other side, you're going to be over 2,700 on gold. And I think 2,700 gold is a very significant data point, if you will, for people to get interested in gold. So what's going to happen is initially gold will lead and gold will get excitement around that fear trade. We'll have more people going to gold. Then the stock market has to sell off. We might go down before we get back to 2,700, which is I think we're going to do. We can talk about that. I think I just did talk about it. But I think once you get back to 27, you get above 2,700 gold, I think that's when you get to $35 silver. And that's when people start to realize that, you know what, I'm not feeling really comfortable with my stocks, my bonds, and even my cash in the bank.
Gold prices dipped during the European session, falling to around $2,575, as investors adjusted their positions ahead of the upcoming Federal Open Market Committee FOMC meeting. Meanwhile, silver continues its upward momentum, trading at $30.85, driven by increasing industrial demand, particularly from sectors like solar energy and medical applications, as well as weakness in the U.S. dollar. Durrett outlines his expectations for the economy and the precious metals market, predicting that once silver reaches around $35, the technical resistance will ease, positioning the metal for a new high. At the same time, he anticipates gold will climb to $2,700, a critical level that could spark increased interest in the metal. Interest in gold investing has grown substantially over the past few years, and this year has been particularly notable for the precious metal. Gold is making a strong comeback, outperforming nearly every other mega-cap asset, including the S&P 500, where 500 of America's largest companies churn out returns for shareholders like a well-oiled machine. Since the beginning of this year, gold has surged by 25%, reaching a record high of $2,590 earlier this week. In contrast, the S&P 500, SPX, has gained 18% over the same period. Durrett suggests that gold will initially take the lead as rising fears about the stock market push more investors toward the metal as a safe haven. As gold prices rise, he anticipates a broader sell-off in the stock market. Durrett further predicts that as the recession intensifies from the fourth quarter into next year, we could see over 100 bank closures, particularly among regional banks. This, combined with a weakening stock market, will amplify the fear trade, driving even more demand for gold. We're about to explore the video, but first, make sure to subscribe and hit the bell icon to keep up with our newest uploads.
The one thing that's done well is physical gold. And the reason why physical gold has done well is the big players who don't care about silver, the big players like the central banks and some hedge funds and some of these other guys have been buying gold all year as hedging. They're kind of getting ahead of the curve a little bit. Gold has been more of a go-to hedge than silver. Silver is the proxy to gold, and silver generally doesn't get interest until later on. And so the later on we're approaching. I think the number, just a ballpark number for me, is 35. I think 35, you get above 35. And the reason why is the technicals. If you get above $35 silver, there really isn't a lot of some overhead resistance for a new high. And I think people are going to know that. And simultaneous to that, if you get to $35 silver, on the other side, you're going to be over 2,700 on gold. And I think 2,700 gold is a very significant data point, if you will, for people to get interested in gold. So what's going to happen is initially gold will lead and gold will get excitement around that fear trade. We'll have more people going to gold. And then the stock market has to sell off. So simultaneous, you get to 2,700 all gold. But I think once you get back to 27, you get above 2,700 gold, I think that's when you get to $35 silver. And that's when people start to realize that, you know what, I'm not feeling really comfortable with my stocks, my bonds, and even my cash in the bank, believe it or not. Now, this is going to be the early birds. So the early birds are basically going to go, if we go into recession, is the banking system going to have problems? The smart people, the early guys, those are the ones, the initial ones, they're going to realize it. Then there'll be, let's say, second quarter of next year. The recession has been biting since Q4 this year, but it's really starting to bite, late spring. That's when we're going to start to see some bank closures. And those bank closures is really what's going to drive the fear trade. Remember, we had like 3 bank failures a couple of years ago. Well, that was really the beginning. I think we're going to see over 100 bank closures, over 100. So I don't know how much more than that, but I think we'll see over 100. And so a lot of those will be somewhat good-sized regional banks. And so that's going to scare people. And on top of the stock market basically being down, you put those two together. Banks are failing, companies are going bankrupt, stock market is down. That's when the fear trade expands. And as it expands, that's how you won't be able to keep in stock 5 and 10 ounce bars. You just won't. You'll be doing back orders for the next 3 years. You will not be able to. And this is how it's going to be for all of your peers. And so what will happen is that once you get about $35 silver and the fair trade kicks in, your local coin shop, it'll flip from 5 buyers to 1 seller. And they'll be out. And once they're out, a coin shop, they usually don't carry much inventory. They're usually out in 1 day. And then so the coin shops will all be out nationwide. And then APMEX, which has the largest inventory, they'll be out of 5 and 10 ounce bars. Once APMEX is out of 5 to 10 ounce bars, that news will get around. It will not take long. The internet with all the social media, they basically say, I tried to buy some 5 ounce, 10 ounce bars, APMEX is out. And then they'll basically say, well, these guys have it in stock. And they'll name about 3 of them. And then a week later, there'll be one name, and then boom, they're gone. You won't be able to find any 5 and 10 ounce bars for sale, except for on eBay for 50% premiums. And those won't stay on, it'll be hard to get those. It'll be it's going to be really wild. I've been saying Q4 is going to be wild. And I think there's a good chance we'll get above 35 in Q4. And basically, we'll start to see the run on the retail side of things. I'm expecting to see flat out shortages of 1,000 ounce bars before we get to $50 silver. That's my expectation.
BRICS is working towards the creation of a new payment system without the integration of the U.S. dollar in its mechanism, confirmed Russian Foreign Minister Sergei Lavrov. The minister added that the new payment system will not only be used to settle cross-border transactions, it will act as a complete financial setup. The creation of an alternative to the current dollar system would be historic for several reasons. It would mark the first credible attempt to move past the 1944 Bretton Woods Agreement that established the post-war global financial system. One of the key challenges Durrett highlights is how this new currency will impact BRICS nations that rely on imports, like India. Importers would need to purchase the new currency, which may not be advantageous for them, much like using the US dollar. Let's now turn our attention to the video again.
And what's happening today is the BRICS nations, because Russia and China allied up, they basically said, look, why don't we just expand the BRICS, which was originally just 5 countries, right? BRICS, Brazil, Russia, India, China, and South America. That was those 5. It was just 5. Now it's over 30. I mean, it's crazy. I mean, I think right now the number of people that want to get in is like 50 nations. Even France said, can we come in? And they said, nope. So they're basically going to keep Europe out and let everybody else in. And that is going to create, like I said, it's not just an economic alliance, it's also a security alliance. Those go hand in hand. And so the first thing that they want to do is they want to marginalize the usage of the dollar. This is really economic warfare. And Trump recognized it, and he actually said something about, we're going to penalize you if you do this. But that won't work, right? It's kind of those type of wars are always lose-lose. And so that's coming. That's one of the reasons why gold is going higher. There's rumors this week, that Russia is buying, not Russia, Russia is buying more gold. The other one is Saudi Arabia. They said Saudi Arabia is buying gold, and they have a lot of dollars. So they're basically, if they're buying gold, they're probably selling dollars to buy gold. The other shoe to drop was Turkey. Turkey asked if they could be in. Now you have Turkey, Iran, Saudi Arabia, all basically aligned with Russia and China economically. This is huge, and that's what that book, The Grand Chessboard, is all about. It's all about showing that all of these countries are naturally linking up. It was like an inevitability because they're all geographically connected. And where we made a mistake is we allowed both Africa and South America to basically not align with the U.S. We had the North American NAFTA, but we never created a linkage for all South America. So now South America has gone up for grabs, and so is Africa. And so those countries are going to align with the BRICS. The U.S. is totally marginalized. So let's go, man. So that was just an overview. Now let's talk about why gold prices are going higher and possibly going a lot higher in the near term. Because the BRICS want to create some type of a cross-country currency that they can use between themselves for international trade. And they haven't figured out what they want to do, but they've been saying over and over again that whatever token they use is going to have some type of a gold backing. Now, I don't think they're going to announce it in October. If they did, gold could rip to 2,700, 2,800 by year end. Some people are even saying 3,000 by year end. I'm more in the 2,700, 26 to 2,700 because I think it's going to go down. We'll have a lot of downward pressure, but I think it will bounce before the end of the year. But I don't think we get to 3. But the BRICS are the wild card here. If they do announce a token that partially go back. Now, the problem with the BRICS currency is that it only really helps exporters. If you're an importer, you have to buy your imports with that token, and you have to buy the token. So a country like India, if it benefited all sides, they would have already done it. And so India is one of the countries in the BRICS that, and several of them are not exporters. So if you have to buy this token, that's like buying the dollar. You're going from one currency that you have to use, it's quasi global currency, to another one. It doesn't really benefit you. It doesn't really benefit your currency. And India knows this. So how are they going to overcome that problem? It's going to be interesting to see how they overcome it. I personally think the solution here is to subsidize the importers. The countries that import, they should get a discount to help their currency.
Gold has been steadily climbing for months, and with a new lower rate environment on the horizon, it could soon surge to new all-time highs. In fact, it's quite possible that gold will hit $3,000 within the next 3 to 6 months. This would be an impressive feat for any asset class, especially since gold has already risen 25% since January 1st, compared to the average annual stock market return of about 10%. What's particularly remarkable is that gold is typically viewed as a long-term, stable investment, not a high-growth asset. So, why are investors flocking to gold now? Do you expect this trend to continue? Drop your comments below and let us know what you think. If you found this video helpful, please like it and subscribe for more. We're grateful to have you with us on this journey.